Speaking of David, he's got some breaking news on WBD. David?
Yeah, Carl, a story we've been following closely, of course, has been Paramount's interest in trying to buy all of Warner Brothers Discovery. As I've reported previously, those talks have continued for quite some time privately, in which Paramount has made an increasing number of bids. Unclear to me exactly where they ended up, but here's the news this morning. Warner Brothers is putting itself up for sale, saying that it has evaluating, or it will evaluate, a broad range of strategic options that obviously will include selling the entire company. It doesn't mean they're abandoning the plan as well to split the company. That, of course, has been the plan that's been in place for quite some time, and one that many expected they might continue to pursue, even with Paramount's interest. But that being said, citing what is interest from multiple parties, my belief, my reporting indicating all those parties other than Paramount have been interested in buying the streaming and studio business, but nonetheless, citing all of those multiple parties, again, not naming those parties, but citing multiple parties, the company has said that it will initiate a review of strategic alternatives to, of course, what they always say, maximize shareholder value. And so that process will begin. Now, they already have in hand a bid from Paramount. I reported previously, perhaps a range of 22 to 24, largely made up of cash. At some point, I expect to be able to sort of get a sense exactly where Paramount ended their bidding, so to speak, privately. But now this will become a sort of a public story, if you will, as you can take a look at Warner Brothers stock moving up a bit. Remember where it came from, of course, before all of this speculation began, with the Wall Street Journal story discussing Paramount's interest in mounting a bid for the company. Stock was somewhere around $12 a share. This also would involve potentially a change in the structure of the spin itself, so that any company that did want to buy streaming and the studio would be able to do so with a bid now, while Global Networks would be spun off at before the close of that deal. It gets somewhat complex, but it basically would involve making the RemainCo streaming and studio, as opposed to the current structure, which under which the RemainCo, so to speak, would be Global Networks, made up by, of course, all of the linear cable networks. In doing that, you might be able to avoid a lot. You would get some tax, what we call leakage. In other words, there would be some losses to taxes, but the belief is it would not be significant, and therefore would enable, well, you name it, Jim. I don't know. Would Netflix be interested? Our parent company, at least for the next couple of months, Comcast, in that structure, would it be interested? Would the likes of an Apple or an Amazon?
Comcast would be nuts not to be
or any
interested.
of them.
Because at least they'd have something that goes up. You got the lowest PE multiple in the S&P 500. You're not going to go lower than that, you see, because there's 500 stocks in the S&P. If there were 600 stocks, that'd be a different story. But there's 500. So you go by that, your PE multiple goes up.
Conceivably, that's the case. Now, of course, you do run into the regulatory side of it. And, Jim, this administration plays an important role in a lot of deals, particularly when it comes to media, given the president's preferences. And there has been an outstanding belief that, obviously, Larry Ellison and his son David Ellison, who runs Paramount, and Larry Ellison, who is a lot of the money behind any said bid for Warner Brothers Discovery, is in a favorable position with the Trump administration. Not so. Not so for Brian Roberts. We know that. I can't speak to whether Netflix is in a somewhat favorable position or not, or any of the other bidders. And so you do have to wonder, in terms of a regulatory path, who would have the easiest time. Perhaps Paramount would. When you think about, some of the others, even with the spin of Global Networks, in other words, so it wouldn't be a part of it. So if you were Comcast and you were coming, it's not like you'd be combining, with anything that you've just spun off, by the way, in the form of Versant.
That's why I think it's
and likewise for other potential bidders.
It's not the stuff that the FCC would regulate. It's a studio. David, whether it be Jeff Dukas, or whether it be David Zaslav, these people think that the studio is worth 27, which therefore makes it sound like that linear is worth what, -3? I'm not. By the way, that is not a joke.
Yeah, no,
okay, it's not a joke. I am seeing that linear is. It's like I worked at the Tallahassee Democrat and I worked in radio. It does happen. You can have negative.
Well, listen, when it starts its life, again, and it may well be that they continue to pursue the split of the company and the so-called spinoff of studio and streaming. And to your point, there are those who've said that the Global Networks business, starts its life almost as insolvent, given its debt load and its cash flow projections. Now, to be fair, Global Networks will own 20% of studio and streaming, again, under the scenario that has been pursued, approved by the board and pursued by the company with the plan of taking place, let's call it in April. But all of that now is set aside while this company is obviously going to have its advisors talking to any and all potential interested parties in buying both Holdco, which is one name, Paramount, or pursuing studio and streaming, which conceivably will bring a lot more potential suitors. And, Jim, we'll see where the value ends up. It's, you know, it's far from clear. And, again, I'm going to try and figure out exactly where Paramount ended their private pursuit. But we'll see whether they think they obviously think they can get a price higher than wherever that was. And we'll see whether they're actually successful in doing that.